Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
We're going to take a look and live different data, but we're going to talk about one of the biggest things that I want to get out of the way and start this call off because it's very important is for many of you who don't know, we made a huge redesign and update to the manager last week with that huge, awesome manager redesign and new look and functionality. By the way, have you guys been enjoying the new manager? Anyone like the new manager? Give me a 777 if you like the new GearBox manager. But in that update, we also went ahead and we made many changes and, you know, saying, okay, we updated some entries on some pairs, but we also made updates and just said that really looking at these JPY pairs, right? There's a few JPY pairs that are an exception that have over time historically performed well because they aren't as imminent, but I'm going to tell you guys a story. And I want you guys to really understand this to hone in why I'm saying that JPY pairs are the worst performing pairs. First, data suggests it. And second, in the 3.5 years or so, I've been using expert advisors to trade. JPY pairs have always just been the nail in a coffin for many accounts. I've seen it over and over and over again, and it specifically has been many of these pairs that we're showing you here. And the reason for this is they just tend to have random rapid spikes and they don't show imminent sign of reversal and typically don't respect typical fundamentals when they trend. They trend and they trend and they trend. A good example is USD JPY last year in March of coronavirus. It went 700 pips. You'd think it would retrace. It went another 700 pips. It went 14 pips, you know? So when you see something like that, it just tells you, maybe I should just not even use these pairs. As well as they might play most of the time, the once or twice a year where they go on unexpected spirals and just trend out of control and don't ever have a significant retracement, it happens multiple times a year. And, you know, you can go study many of these pairs and see it. And I've seen it, especially AJ. I mean, I got to tell you, there was a time in my trading career where I was so stoked about all the profit I'd been making and I was crushing it using some semi-aggressive settings back in the day on a different EA. And I remember I was on the phone with my dad and AJ, I watched an account just go like 10,000 drawdown, 20,000 drawdown, 30,000, like in 30 seconds. I was like, Dad, I gotta go. And the whole guy was gone in like another minute. And AJ and AUD USD and, you know, all made a few hundred pip moves at once. And these were aggressive settings back then. We've adapted to market conditions. As always, you have to adapt to market conditions. But the point I'm making is the JPY pairs just haven't played nice. And AED-CHF didn't really play nice either, but it didn't go crazy. It's still, though, over time, looking at the profits made in comparison, it just hasn't been ideal. So we had to look at many of these things and say, well, what ones perform the best and do the best? And we've been going through that. I think this is a new FX book. And yes, anonymous attendee, I agree with you. Said, when is the correlation update coming out? I got to tell you, this is a great question you asked as well. Can someone who's not in the US get the MAV version? This way we can manually approve the pairs we want to enter and decline the ones that are correlated. Yes, absolutely. You can switch to the GearBox MAV version. Anyone in the world can use our manual approval version. So if you're a more controlled user and you want to be able to actually approve the pairs until that correlation feature comes out, absolutely. And let's talk about that, you know, the correlation. I want to pull that up as we're talking about that, because this is a feature that I'm very excited that we've been trying to really start to hone in on. And, just to take an example, this is kind of what we're going to look at. We're going to take a look at the correlation, and we're going to see, okay, what currencies have a correlation higher than 75%. And you can go through and kind of map out, all right, what pairs have high correlation with each other. So if we go to EJ, okay, we can see that GBP, JPY, and EJ actually have a high correlation. Now, GBP, JPY doesn't perform very well, but Euro, JPY has always through time. It's actually very weird, but EJ data says it does well. There's no argument about it, but data suggests otherwise for a pair that moves much more like GBP, JPY. But the point here in correlation is typically they're going to move the same direction. The chart's going to look pretty similar when you look in that time frame. Now, same with USD, JPY, but only 88. It's just like looking at these pairs and saying, okay, chances are if EJ is selling, UJ selling, right? Chances are GBP, JPY selling. And that's what you have to look at, is they're typically going to be moving the same direction. So what that means is if you're counter trending or these pairs trend and you're now going the same way on multiple of them, it's kind of what we've been experiencing in the past month. A lot of trending in the market. And, if you trigger into correlated pairs, you're going to experience that. So that's a lot of what we've been seeing the past few weeks is many of these pairs, all these pairs trended really hard. And now many of them are consolidating. And a cool tool I could show you guys, hold on, let me pull up this VPS real quick. And this is something I'll show you guys right now, and I'll start showing on calls. It's actually a tool, yep, there we go, that Desan designed, and you can see what pairs are random, what pairs are biased, and which ones are trending. And really very fascinating to see. We're in an interesting market cycle with many of these pairs. You can see USD JPY still trending, Euro JPY still trending, but many of the other pairs here are biased, are very random right now. And you can switch through and toggle and see how that looks like. But it's a very cool tool, powerful to kind of look at and see what else is going on. I use this often to make different determinations when I'm doing either manual trading or looking at the charts or even maybe trying to mitigate risk. But this is, just to kind of show you, I'm saying we're in a consolidated type looking market, and that's more because everything is biased. It's not fully consolidated right now. Now things are starting to go random or biased, or it's like, okay, where are we at? We're not consolidated anymore. And we're looking to get the movements. Many things started to swing, as we've seen. So let me pull back up. But yeah, the correlation feature is going to be great because, again, how the plan is to design it and what I've put on paper and what we're working on programming is that it will not allow a trade that is more than 75% correlated to enter going the same direction. So an example, let's say you enter AJ and we go down here and we know that NZD JPY and AJ are highly correlated, 96.2%. The charts look pretty identical when you go look at them on different time frames. So it's pretty funny. And, if you went to take a sell on AJ and then a sell on NZD JPY after, it would block the sell on NZD JPY and say to the software, you could only buy. And now it's not going to force the software to take a buy, but when that buy opportunity happens, it will take the buy. But it will not allow things going the same direction. So yeah, that's going to be a great risk mitigation feature. Again, it's something we're heavily working on. We've seen it's needed the past few weeks with the way the market started to trend. Yeah, CJ, you said your peers are stuck in -1 and all charts have smiley faces. I get a list of support tickets sometimes that I need to personally look into from my team, but I haven't seen this one yet. I know you said you submit support tickets, so just DM me your username. I'm gonna look into that. And Uh, okay, this is a good one. I migrated open positions from Einstein into GearBox, applied sniper strategy, and all ghost gears share -1 for buying sells it because drawdown is above 25% balance protection, or I have set it up wrong. If balance protection is kicked in, that might be possible. I believe it's still supposed to ghost trade even if balance protection is kicked in, but I'm going to look into that. Doesn't really need to if balance protection is kicked in. It would just be nice if it was finding other entries for when you got out of drawdown or closed a position, but I would believe that probably is exactly why. If balance protection is active, that probably is why it says -1, -1. Instant entry update come. That's already a thing. It's on the. I did a call on yesterday. The recording's out there. Oh, enter trade now. Okay, yeah, no, that's coming soon too. That's on our list. I Somebody said, is there a lot of people still in big drawdown right now? It depends on big drawdown is, what your risk is. I mean, yeah, there's a lot of people anywhere between, I'd say 10 to 30% is pretty common right now on conservative settings, which is, on the higher side. But the truth is, if you were trading any of these pairs with any other product, you probably would be having a much worse day. And that's what makes GearBox so powerful, because these markets trended. And then, if you look at the charts, or maybe I'm not sure if you understand trading, or some of you, I know a lot of people come in and use EAs before they fully understand trading. And sometimes they'll be like, hey, the software's not working like it used to work. And it's like, no, it's the markets, right? It's just like anything. But what I always try to tell people with these products is you have to think, if you invest with a financial advisor, are you seeing your 401k every day and seeing the way the numbers fluctuate and giving yourself a heart attack? And the truth is, chances are you're probably not, or you don't even get to see it that often. And that's why I always tell people the goal here is, as long as you are not losing money, you can withstand open floating trades at different points of negative correlation, especially when things go a little hectic. The key is that you never lose everything, and that's why there's all the features such as balance protection. And let's get into the risk calculator. There's a new risk calculator. So you guys remember this risk calculator? This is based on the base algorithm. A lot of people use this to make judgments on how they were going to handle things when they were using Einstein. But somebody, his name is Matt Jazz here, he sent me this cool one that you can use for GearBox. Now everything's in points, not pips. So 210 points is actually 21 pips. So these are typically the settings we run. And this was on average saying you entered on a start gear 3. So remember, this is all based on one pair. So if you were to look at one pair using, and what I've noticed is with larger accounts, you actually do want to decrease your starting lot size. I'd say anything over probably 25,000, you should really look to get conservative and start going at least on the 0.01 per 2K side. And if you're a really conservative person, 0.01 per 3K. Just on smaller accounts, it's okay to do a 0.01. But as you get larger, because of the multipliers, it's just smarter to start with a smaller starter lot size. But let's just use for an example here. This is a 50,000 euro account, and this could actually be, because that's like 60 grand, be more like 0.3. And you look at that, that's 21 pips. These are the base settings. You're entering on a start gear of 3, so you'd only skip 2, which we don't have many pairs there. So really entering where they're only skipping 2, this is the only ones. But just to show an example of what that would look like, AUD, NZD, CAD, JPY, NZD, CAD, USD, CAD, it's a good one. So we'll take a look here. That's the earliest entry setting. And even with that, with just one pair, if you were to go over 1,000 pips, all right, so remember you're entering at 87 pips. And if something was to still go 1,000 pips against you, your drawdown's 46% on that one pair. Now, the likelihood of, what are we looking at here? Let's see here. AUD, NZD, the likelihood of that happening, that's pretty. And then, actually, hold on, let me see something. Start gear 3, yeah. So we're on our 87, and yeah, that's not very likely. I mean, you can go look at history, look at charts all day long, and see. Now, if we go to something also like USD CAD, same concept, not very likely, or NZD CHF, and USD CHF here, but that's the earliest if you were doing sniper. Now, if you look at what happens when you get into some pairs like this, let's say sniper even still on USD, JPY, AUD, JPY, we're not even trading many of these pairs. Let's just look at AUD, USD though, for example. And this is how you can also make determinations. We'll make this calculator public too. But this is how you can make some determinations also on risk and understanding your max pairs. Because if you understand what has to happen for you to lose money, you might change your risk level. Start balance. Let's go with, let's just use $1,000 account, for example. Most people have $1,000 account. So, and you actually can always see the $1,000 numbers here, even if I was doing higher ones, but we'll say you're starting on gear 5. Perfect. All right, gear 5. If you were to enter 209 pips in, all right, $1,000 account, what it would take for one pair to blow you, and you're at 80% drawdown after 1,400 pips. So again, what's the likelihood of that happening? So you have to look at more likelihood numbers. So let's say what's 500 pips, right? Because that's where your first stop loss is. So if something went 500 pips against you, you're right in between 8 and 9 here. So you're in 10% drawdown on one pair if it went 500 pips against you on one of those pairs such as AUD USD, or even if you go into GBP pairs. Let's take a look. We're gonna go sniper, and these are, some of these are best performers, but we'll just say on average 6 here. Start gear 6. All right, you're waiting 303 pips before you even enter. Another 500 pips gets you here. That's 13% drawdown. So if something went 500 pips against you at that point, that takes you to 800. It's a little more actually, but yeah, 800. And that's what that would look like. And that's on $1,000 account. So, again, I'm going to make this calculator public because I think it's a really cool tool. Just everything's in euros and points instead of pips. So 210 points is 21 pips. So if you were to want to change your range multiplier or grid between gears, that's it. Really cool tool. I like this because you can really calculate. And remember, a lot of times, many of these pairs, you're only going to go max levels 8, which is actually going to put you into grid level 7 in order to, and that's one GBP, it's going to take you farther. GBP is 12. So you can actually go here. But again, that's a 2,000 pip move for you to blow an account on one pair after entry. So again, a lot of these things aren't likely, but the other thing is, you have balance protection. So at 25% drawdown, you're going to stop taking any new trades anyways. And that's also a big game changer. That's why balance protection is a cool feature. But again, remember, this is all based on one pair. So you would want to choose a healthy median and look at what 3 pairs looks like, or 4 pairs, whatever you're running, and say if all of these went 500 pips against me, which is unlikely, right? But that's what you should look at. If all of these pairs I'm running went 500 pips against me, what does that look like, right? And is my account going to be able to handle something like that? And I would say that's your safety net. I'm reading through some of these questions. Somebody said I have CAD CHF, EuroCAD, and GBP. JPY trades open. Yep, you're in the swing. I mean, there's times through history, like I was looking at that chart the other day. Let's see, do I have my VPS quote open? Hold on. There, yeah, we do. That's not the VPS I want though. Let me get into a GearBox VPS real quick. I was looking at, an example the other day of, say, Euro USD and different trades. A lot of times what people need to understand is when taking some of these swings, GearBox is really designed on a large swing institutional strategy. And that's why I say it's important to understand what risk looks like. And that's why I'm going to get that calculator out public. You guys ignore this. These are all a bunch of different things. I think I was using arrow on this one. Alrighty. So let's just pull open chart here. There was times in history looking through this chart. So if we'll go to the daily, and if you take a look at, say, a run up like this, right? This is a solid example of, looking at, can GearBox handle movements? And GearBox has ran through all of this and it did great, right? Many products ran through this and did great because there's enough chop. But when you look at some of these movements, this is a larger move to the upside from, 2020 to now. I mean, this is a whole large move to an upside. But if we take it down to even a smaller time frame, you can see all these different comparative moves here, right? We came from here to here. And it's just, as long as there's enough chop, but then we go take a look at like a pair that's not performing well, where we'll say CAD JPY, for example. And what you see here, this is just pretty detrimental, when it comes into things. And the same thing was happening here. I mean, it's when you really start to look at these charts, you can see that just overall, CAD JPY finally had its fall off the cliff, right? But it went on just a trend for a long, long period of time here. I mean, we go back to February, just this right here. I mean, nobody got into the bottom of this, obviously, but still, I mean, you get in even here, you still got to be able to withstand that. And that's why pairs like that through time have excessive, weird drops and moves. You got to ask yourself, like, I don't know why this keeps resetting on me. I'm pulling it over here and it's not liking me. But okay, today VPS not liking me. But if we look at this, you see there's a large chop right there. And it's just all these different pairs. You have to kind of just look at them and say what's working, what's not. And that's where, oh, can you guys not see my screen? Oh, yeah. That's always fun. Okay, well, I'm saying looking at, CAD JPY, this is what a lot of people experienced recently. And then many people just got out of it. It finally started to fall to a downside. But even though, say you were using this pair on a strategy that did instant entry, what if you entered to sell right here? I mean, that's detrimental, right? But most people, maybe the GearBox got in here or even later, depending on when they started their account. And this is another reason I'm going to tell you guys right now. This is the reason that I clear ghost trades every week. This is why, because imagine you're in the ghost trades and you got down here, right? And you were about to take an entry, but you didn't. And then it clears your trades. Well, that's awesome, because now maybe you only got in here. This is why we clear ghost trades every week of trades that aren't into where they need to be. This is the main reason that I actually designed the feature to clear ghost trades at the beginning of the week, is examples like this. And even with that feature, pairs like this still do crazy run up. So you want to stay away from things that large trend, and like you can see that large spike that happened there. I'm not sure why the VPS doesn't like to let me stay there, but just when you look through time with many of these pairs, you can see where things are detrimental. And this is my wonderful my just GBP accounts. I'm only running 4 pairs on it. It's not up a lot of money, but it's done really well. Super conservative, massively conservative. But as you saw on here, GBPs are the best performers. I could probably add these 3 too, but I'm just running the GBP4 strategy on that larger guy there. And that's what I love about GearBox, right? You can customize, choose your pairs, right? For somebody that's a beginner, don't overcomplicate it. Just, run the best performers and the ones in white. Anything in yellow, that's like more advanced. If you're an advanced user and you want to run the worst performing pairs because you like them and you think you have a way to make them work better, awesome. But for now, data says that these pairs just don't really support any strategy that, does use any form of counter trend trading. So I would say to use these pairs, you would have to completely modify the strategy and settings to find a different median. And I don't mean entering later. I mean, just lots of different probably ideas you would want to have in place for that. And those JPY pairs. All right, let me go back to questions before everyone told me they couldn't see my screen. Vlad, somebody sent a my FX book here. I love FX books. How we doing, Vlad? Wow. See, so this is an example, right? Definitely in some higher drawdown right now than anyone would ever want to typically be. But at the end of the day, we know that GearBox and the strategy it has is very precise and it does what it needs to do. And many of these pairs just ran up a trend, but this thing's been performing. It's been crushing it. I mean, I don't know what your max pairs are, but you've been getting some pretty insane monthly returns. So definitely on the higher side, I would imagine. Still doing great on average win rate. Just, these trends in this non-correlation feature has you in a bunch of correlated pairs. And when things all trend, they trend. And there's not much we can do about that except go, well, thankfully GearBox knows how to handle risk and management, which we can see on many of these MyFX books here. That's an Einstein. But this is good to show because this is why, again, the JPY pairs, this is, Einstein, which is very similar to the base strategy of GearBox. And, JPY pairs tore it up, right? A lot of it was UJ and EJ. Now, what I like about EJ is if you actually study profit on EJ on accounts, you'll see that EJ produces a good chunk of profit, whereas UJ doesn't produce as much profit and produces typically more drawdown. EJ tends to produce way more profit, so that when you do take the hits every once in a while, if it does trend, it's okay. It's worth it because it balances itself out. So those are other factors we look at in pairs, but EJ's always performed well. So here's an account as well, been running since October, 772 euro starting balance. They're in 28% themselves. I think actually they're not even in that right now. That was their highest. That was weeks ago with CHF. So, just I like to study, go through people's FX books, see how they're doing, especially when we're all trending. I know that Amy switched brokers, so that one just went to a different one. Let's see how we're doing here. Increased by about 1%. He's in 36%. This is why I love balance protection mode. Balance protection mode keeps your drawdown from massively increasing. When things continue to go against you, you just lightly start to increase, but you don't have the drastic approach. But yeah, obviously right now from what we've seen, the market's been trending. Many people have experienced higher normal drawdown. Everyone's pretty much in some form of drawdown unless they're a brand new starting person. This is a 100 euro account running. I would never do it. You can see he's obviously cut a lot of trades to not, blow it. He's probably very hands-on with it because you can see he's closing trades manually. This is my 10K account. It's actually not in that bad. It's just chilling and like $700 drawdown right now. Running swing settings, it had a higher one definitely though right here, 17.7%. This account's running 6 max pairs. I think this one I took down to 4 because it was on swing strategy, but you can see it handled periods of drawdown like a champ actually. It got in higher than normal drawdown, definitely did, especially with those max pairs. It even took a huge loss, right? I mean, it was a pretty significant loss, but you can see it actually made most of it back very quickly. Which, you know, that's another powerful thing about the GearBox strategy is even if you hit a stop loss or 2 or 3, the way it's designed is it's going to take a swing back. Obviously, though, as you see, it was able to handle different spikes with massive correlating pairs. And this was 6 max pairs on swing on a small account. Obviously, I got uncomfortable with the drawdown a little bit, but what happens is balance protection protects me, keeps me chilling. Things finally start to swing. You might take a stop loss, right? This was a case where, look at this, followed equity. We were about to get out of drawdown, and then boom, things fell right back off a cliff, hit a stop loss or 2, swung back in the game. And, you know, now the drawdown's very minimal. And again, this is a more aggressive account running 6 max pairs. I recently just took it down to 4, which is why it's, you know, pretty calm right now. That one stopped running before elections. These were demo accounts back in the day starting. Let's take a look at this one here. 22%, totally comfortable with that. But here, what you can see is for months, GearBox experienced little to no drawdown. But then when the whole entire market went massively trending, GearBox is pretty much chilling. It's protecting your capital. It got in some larger swing trades, but at the end of the day, if we're looking at the long-term vision of how the products perform, to beat a hedge fund, we need to get over 55% a year, right? To beat some of the top performing hedge funds. So far, this account since August is it's on track to do that. Minimal drawdown. Super conservative. This one's still running now. He switched to GearBox. So that's a test account. This is an aggressive one. This one, let's take a look at this. This guy's running 10 max pairs, right? Phil, you're a crazy man. But 10 max pairs, 47% drawdown. I mean, that's pretty insane. I'm not gonna lie. I would never do that, but I think he's adjusted his lot size also to factor for having that many pairs open. And it's crushing it still. I mean, it's up 86%. Obviously gotten in some higher drawdown, even withdrawn some profit. But the point is showing that, yeah, even with so many things trending against you, I mean, yeah, this is actually really aggressive. Is this the starting lot size? Yeah, no, totally aggressive. But still, I mean, even with those aggressive settings, balance protection keeps you in the cool. You know, don't take any more trades. Just manage what I got going on. And then I'm going to get in some Q&A here. You can see this one. They're in some higher drawdown. I don't know what their settings are, but they haven't lost a trade yet. They're at 100% win rate so far. Only 40 trades. That was pretty crazy. 40 straight trades and then some drawdown. They're probably like, what's going on? Well, haven't hit a stop loss yet. So I don't know what they're doing, but they're running. I know this account was like a $500 account running multiple max pairs when it started, got in some trouble. I think became more conservative after that, putting some more money. Yeah, they did. They were doing like 40% a month. Definitely we're running on the aggressive side. And that's the thing, anyone running on the aggressive side, the key is once you see a little bit of drawdown, you start to go, maybe I shouldn't be so aggressive. But you know, everyone's in control. Let's take a look here. This seems like a pretty conservative one. Yep, this is a conservative strategy. Ghost plus real, 3 max pairs. Large account. Definitely 22% drawdown. Probably not too exciting on this balance, but you're probably still at peace. Why? You have balance protection mode. And these are the things to cover, right? That you know that, hey, and what do we got? We're in AJ cells, you know, that's definitely a sell very soon. I mean, if you haven't seen a sell in a while, take a look at AJ for sure. I like these trades. I agree with many of these trades. Oh, they were doing great. December crushed it. 17%, 11%. And that's why it's okay to 1 month get in drawdown and not make a lot of profit. Look at their March so far. 1%, 2%. We're how far into March? 19 days? It's not as exciting as the 17 or the 11, 7. I mean, even if this month they only do 5. Again, our goal is what do we look at over time on average, and what do we see as time goes on? Because our goal is typically how do we beat first what the bank's giving us in interest, and that's really easy. And then second, how do you beat some of the top performing hedge funds in the world? And if you can do that, that's as conservative as you need to be. You don't need to shoot for hundreds of percents a year. You can do 55% in a year, you're beating some of the top hedge funds in the world, right? So I tell everybody, your level of risk is kind of on you and how conservative you want to be. See here, this is an account been running. They had a 24% max, doing about 10% a month, really good. Smaller balance. Took some losses, made it back. Right there. That's what I love to see. Profit factor still incredible. Most EAs you see after they take their first losses, profit factor jumps below a 2. You see an EA that it takes losses like this and the profit factor still stays above a 2. Again, you're on the right path. This is an account that obviously started at one point on Einstein and Alexander. So if we do a custom analysis on it, let's take a look right here, November 12th. $80, 35% drawdown since starting and up 84%. I mean, not so shabby. Not so shabby. Crushing it, crushing it, crushing it. Little no drawdown since October. Markets go trending. GearBox is safe. Yeah, you're in some drawdown, but GearBox is safe. You're holding on. Profit factor 30. I mean, wow. Only 72 trades. Only took 7. Look at this. This account only took 72 trades total to make 98%. They've obviously deposited a little more money, but they've only put in 990 euro. I mean, come on. 3,000 positive pips. Incredible. I don't know why this happens with like some different brokerages, but when you deposit money and withdraw money, it reads weird. So you have to look at it based on profit. You have to go switch on some brokers to the profit tab on my FX book if you didn't know. But you can see the last time they got in some drawdown, they ran up and made, I think we're at $4,000 profit and ran up to 10, made like $6,000 in one swing. Pretty incredible. Yeah, it's actually insane. And I think right now they're actually in floating equity. So Andy, I believe this is your account, Andy, and then you're in a good chunk of floating equity again, like 10%, according to this. If that's actually the case, and my FX book isn't tripping, I would probably close out that 10% profit. Because if that hasn't closed, I'd be closing. 10% shut me down. I'll take that profit off the table. That's Ghost plus real strategy, I'm assuming. Now let's look at some one pair data. This is fun. We'll see what other JPY pair went on a run and killed a $500 account on swing settings. That would be CAD JPY. CAD JPY fully killed her. So you can see why I've put these JPY pairs again on the worst performers. But swing settings on CAD, by the way, we just moved these up. originally that account was entering, I think, on like gear 2, maybe even gear 1. I think it was gear 2. So we bumped this up to it entered here, and it killed a whole little $500 account. So that's why we took those JPY pairs out. But I'm going to get into some Q&A real quick while I have this pulled up. I had no. Nicholas Hauser said, posted this in the chat, but maybe better ask here. I'm still in 10% drawdown in over €4/AUD pairs second week. No new alerts on only second week, man. No, you're good. He said, seems like this could go treading DD water for weeks. Perhaps better to close, start fresh. I mean, that's up to you, man. If 10% is your max equity risk and you say, like, I'll give you an example. Anytime I do anything aggressive with a strategy, I tend to set a lower equity protector, right? Now you're not being aggressive, so 10% drawdown it shouldn't be scary. Yeah, you might hold it for a little, but the 10% is not bad, man. It's pretty normal and standard with any kind of strategy, but obviously many pairs don't even touch that normally with this strategy. Just the past few weeks, we've been seeing a lot of trends. But the point to make is when I do aggressive things, like if any of you are aggressive users, oftentimes I actually set a very tight equity protector on aggressive accounts, such as like 10% myself, because I know that if my aggressive strategy can make more than that in a month, then anytime it's going to go into that period of drawdown, I'd rather just take the loss and make it back. Right. And that's like a very aggressive strategy for risk management with my money. But what I tell everybody is if you're doing anything aggressive, you should not have an aggressive account unless you have a conservative account and you take the profits from your aggressive account and put them in your conservative account. That's the only reason you should ever have an aggressive account. But the point is, I believe in equity protectors too, but I also don't like to close losses, which is why I also have the balance protection feature built in. Balance protection can really get you through nasty waters if you just you understand your risk. Anonymous attendee, I have another account I've imported with Einstein open positions with GearBox with Sniper and noted that only existing Einstein charts have -1, whereas all the other new charts are fine with 0 and -1. Why is this the case? Well, the reason for this is it's not opening ghost gears because you have open trades open already on Einstein that it's managing, which started at -1 themselves. So that's why it doesn't take ghost trades on those pairs, because there's trades open, it's managing. Pamela, I've received numerous messages. I'm at 30% drawdown. Is that bad? No, you get notifications of drawdown. If that's where you set yours is at 30%, then that's a lot of people are sitting in that same amount right now, depending on. I see Sniper. Some friends of mine started using GearBox on Monday with Sniper. Is it normal? They haven't gotten any trades. Yeah, that can be completely normal actually, because as I've mentioned, the markets have been, how would I put, very consolidated, and often right now, because of that, GearBox and the base strategy is actually trading with the trend. So remember, the base strategy of GearBox is counter trend, but the belief in it is that you're counter trading the trend in the ghost server where you're skipping the drawdown and then hoping to catch an entry right before the reversal. Now, what's probably happening for a lot of new users who aren't receiving trades this week is because we are in the end of the move waiting on the reversal, right? So let's say, for example, you're in AUDCHF, right? And or let's say, you're in EJ and you're waiting for a reversal, a sell. All right, so you're in EJ and you're in a sell. Well, GearBox now in the ghost server is also probably selling. So as things start to go, it's not actually getting into drawdown in the ghost server, taking new positions. It's actually trading with the trend. So what some people are probably experiencing on some reason they're not getting trades is they're trading with the trend. The solution to this is when there's consolidated markets, you can use a lower time frame, such as H1 or H4. The 4 hour, the 1 hour is more likely to play both sides of the ghost server. And I'll show you what I mean by that. You can see I run the H1 on just my GBPs here because I'm only running these 4 pairs. So I want it to have more potential trade opportunities since I'm, already waiting so far into a trend for a trade. But this one's not doing it, but let's find one that's trading both ways. Okay, so you can see GBP NZD here is actually trading both ways. It has a buy 3 open and a sell 4. So it's been trading both ways in the ghost server. So what'll happen here is there's potential for you to end up basically taking either the buy or the sell. Yeah, so it's just going to give you potential more opportunities if you use lower time frames and consolidated weeks in markets. The short, simple explanation is it's more likely to just play both sides on a lower time frame. But you can see this account's doing its thing. Very conservative account, just running GBP pairs. It's been running since started February 4th to now. So in a month and a half, a little over when this trade closes out, going to be a little over 9% with very minimal drawdown. It's done very well. I see another MyFX book. Let's look at this one here. Denville. All right. Denville's crushing it. Started with 1,000 deposit, 32% drawdown right now. Not bad. Monthly though, 36%. That's just insane. Incredible. Yeah, 34 in February, 10% already in March. I'm not sure what other things you're doing custom, Denville, but your account's crushing it. That's for sure. I'm not sure how to ask this, but when you're in drawdown, is it wise to wait to make a deposit, or is it a good time to deposit more money? If you're ever uncomfortable, you can always increase your equity. I always tell people, don't increase your risk, increase your equity. If you want to make more money, you don't increase your risk, you increase your equity. So Brent, if balance protection happens and you hit a stop loss, will GearBox open new trades if the drawdown is less than 25%? Yes. Now, I believe it should automatically trigger back on, but I don't actually know that. You might have to hit the reset button on one of the charts whenever you are ready to trade again. And if it's below 25%, it'll start trading. If it's still above it, it'll stop again. So I think actually you have to hit reset. I don't know if it automatically will start taking trades again. I need to look into that. I'm going to test that after this because, I know how things work when we start things, but as we adapt features and make enhancements, sometimes I have to retest and ask myself questions like that, Brent. So let me get an answer for you. Ivan, still no new trades here started this week. Then, yep, that's exactly what's happening. How do you put a 10% equity protector on GearBox? Do you change max equity risk to 90% or to 10%? Well, if you're at 100% and that means you can use all of it, that means that you would then put 10%, correct? Yeah, because that's what I did. I'll show you an example. I'm not even going to show you my aggressive account example because I don't want anyone to test it or do it because that's not a duplicatable strategy. So I'm not going to show you, but I run a 10% on it and I hit it like 3 times this week. I made 10% in a day, 3 times, and then lost it. Highly aggressive account, but that's reading through the comments. I see the balance protection question is again, Alan. Awesome. Yeah. I've taken 2 stop losses on GJ this week. Good news is the TP on the remaining should make up the difference, right? It should, absolutely. I mean, I can't see your exact account or the lot size taken, but typically in my accounts, 2 stop losses, my take profits, and then the rest of them make it back. If we have real trades as our take profit setting, will the software still cost average to get out of another open trade, or it'll just close after 30 pips? No, it'll still cost average, Alex. Brent said the lot size isn't increasing how it normally does. Brent, go ahead and put me a support ticket on that one, and I'll investigate what you're talking about. Ken said GearBox is awesome, just in a bad 3 weeks. Yep, it's been a trending 3 weeks, and that's why I'm adding a correlation feature. And anytime we see something happen that historically hasn't typically happened, which is all these pairs just trending nonstop for weeks, anytime historically we see things like that, we say, how can we make the product better? We don't say, oh, how do we change the settings? It's like, how do we just add more to the product to safeguard that, which, the correlation feature will be huge for that. Let's keep reading through. Steve said, my GearBox is killing it, running aggressive, set at 3% weekly growth, and it's at 520% of that. Steve, I don't know what you're doing, but I'm interested. He said he's 130% ahead of his 12% a month goal this month. I'm not really sure what you got going on there, man, but I'm gonna take a look. So on the CAD JPYs that killed the $500 account, what do you advise for larger accounts to holding this CAD JPY? Well, Philip, what I'll tell you is if you haven't hit a stop loss, it's okay. The reason I ran such small accounts is because obviously $500 with one pair is still very, very, this is why I tell people max pair setting 1 to 2, under $1,000. And under 500, especially one pair max, because that's the exact possibility of any of these pairs. So, and the reason I test that with such a small balance is to know when a pair isn't performing how it should. Because if it does manage to hurt a little account like that by itself, then it shouldn't typically be a pair most people run. But if you haven't hit stop losses on it and it hasn't done any of that, I would tell you that, I mean, it started to fall off a cliff this morning. So my best thing I would say is, hey, how do you, just get out of that trade for break even or minimal loss anytime you're in pairs like that? Or you can swing and let them get into some profit, right? But the key is with that one, it's already started to fall. But anytime, you can get out of anything that makes you uncomfortable, I always tell people sometimes it's okay to close a trade for a small loss and see another day. It's part of trading. I think the biggest and hardest part of trading for some people is knowing when to just sometimes close out something. Like, let's say you got in, I'll give you an example. Let's say you got in 30% drawdown and, you're in 4% drawdown and maybe you're just like, should I just close this? And sometimes maybe the answer is yeah. I can't tell you, I'm not, licensed to tell you close trades on pairs and whatnot. What I can tell you is that's a personal decision. And sometimes I look at those things and I do it myself. I go, man, I was in this and, maybe I get into 2%. I'm just like, I just would rather start fresh, close all these, right? So everyone, like I said, try to get to break even, minimal loss if you're uncomfortable ever, and just get out of pairs, mitigate risk. Especially if it was a troublesome pair and the other pairs you're running are running fine, just try to get out of the troublesome one when you can. David, do you no longer run JPY pairs? I run EJ and CHF JPY. Those are the only ones I'm touching right now on GearBox. I'm going to continue to run these ones on test accounts with new entries that I've increased them all to. So I will be starting new $500 accounts with these, with the new entry settings, just to see how they do with better entries. But For the time being, I have them highlighted as worst performing pairs, highest drawdown possibilities, unpredictable trends often. And regardless of if these entry settings are better, I still believe this is true, but we'll be gathering new data on them. Does increasing equity without changing any other parameter change the calls GB takes, considering it was not hitting any limit before? No, increasing equity doesn't change anything. You have to change your settings to have an effect. It'll trade the exact same way, even if you increase equity and don't touch anything. It's not going to make any changes. Let's get back into the Q&A. I don't know where it went. The Q&A always disappears on me. Oh, here we go. Q&A is back. I'm just reading through, making sure I didn't miss anything. Okay, here, I'm coming back down here. Started my software later in day Tuesday, Sniper 3 max pairs, haven't gotten past level 2, so no notification for trade. Sounds about right with how the markets were this week. John, that sounds about right. It's been consolidating. You know, chances are maybe the reason you're not getting past 2 is exactly that. Things are just kind of going, we're trading with the trend right now. Like the base strategy of the algo is definitely currently trading with the trend. And because of that, the best thing you could do this next week, being that we might stay consolidated. I mean, we're going to take a look at the news in a minute, but the best thing you could do is maybe use lower timeframes and consolidated periods. David, thank you. Using lower timeframes may also put you in potential drawdown, right? David, you're going to get into more trades, which more trades mean more exposure to the market, which mean more potential drawdown. Yes, absolutely. But in consolidated markets, it can also get you trades when you weren't getting any. So for users who sometimes need to see trades, they might use a lower time frame during weeks where they see that the market's very consolidated and hasn't been doing much. So like this upcoming week, but we're going to take a look at the news and see if that's my forecast. You know, obviously I've been sticking to the daily, besides on my experimental GBP account, you know, just because I'm only running the 4 of them, but everyone's free to kind of do as they please on that. All right. All right, somebody said, repeating my question seems you might have skipped. All right, let's read it. After entering a trade, suppose after gear 2 for range 21 and range multiplier, when after how many further pips would GearBox take a trade in same currency pair? Here, I have that visual right here for you. All righty, so your first level is level 0. All right, that's in the Ghost server. So let's say you enter on level 2. The next range is going to be 38 pips. The next range for level 4 is going to be 51 pips. The next range for level 5 is going to be 69 pips. The next range for level 6 is going to be 93. Level 7 is going to be another 126, total 426, right? So here's your total pips, and here's the range as it increases. Stop loss is set for 500 pips. Is it per trade? Yes, it's 500 pips on each trade. So it's not on the total sequence. So it's 500 pips on each trade from where they enter. To remove a pair, can you just close the window if it's not in any trades? That's correct, David. Just if there's no trades open on it on your real account in your open trades right now, you can just close out that pair. Let's see what else, anything going on in the Q&A. I don't see anything else question-wise, so we're going to get right into Forex Factory. And let's take a look here from the 20th to the 27th. All right, we got Monday, USD, Fed Chair Howell testifies and speaks. Oh, what is testifying about? To research that one. Europe, We got a good chunk of red folders this week. A real nice chunk of red folders. This could be really great, or it could just mean staying in the same place you're in now. But hopefully it means really great. So yeah, lots of red folders this week. Definitely going to be a more conservative week. And as we discussed, there's this calculator. Start to understand what your risk looks like per each pair, so you can understand if your max pairs you're running is too aggressive, if your lot size you're running is more than your comfort level. Again, a 0.01 per thousand is pretty standard, but it isn't super conservative either. It's powerful, but it's not super conservative. In a trending market like this, many of you maybe are seeing higher drawdown than you like. Maybe you go to 0.01 per 2K or per 2K, or maybe you go back to 0.01 per 3K on your strategy. That would be my ideas is, depending on your level of drawdown, your level of risk, take a look at this calculator. I'm going to make it public and put it in the chat. I'm going to also film a video for the EA Academy on how to use it and make different things along those lines so people can understand their risk and their strategy. Also, again, any account over $25,000, I would say we should be decreasing the lot size no matter what, just to make it more conservative going into it. As you do larger balances, position size multipliers get a little more aggressive than maybe they are on a smaller account. Not too much, but it obviously grows a bit more. Well, with that being said, I don't see anything when trying to add GearBox Manager and maybe to pair my VPS3s when I try to click on the swing strategy. Michael, I'm not sure if you're using any of our other products. If you are, if you have a lot of other terminals open, that could be why. If you're just using GearBox, it shouldn't freeze. It's very fast. I have one VPS with 3 gearboxes running. So the only thing I could think of, what's the take profit pip level for each gear? Jatal, that's a very advanced question because as it cost averages, that's different mathematics that go into the equation. But on your first entry, if you're using real trades only, your first entry, let's say you enter at a level 4, you're going to have a 30 pip take profit. If it cost averages, that's obviously going to change and, cost averages it needs to. Your first entry, if you're using double take profit, is going to be 60 pips no matter where you enter. If you're using Ghost plus real trades, the take profit is going to vary always because it's calculating the take profit based on as if it needed to balance out all these trades. It's basically treating the take profit as if these trades actually existed, even though they're just in a Ghost server and they're not on your real account. It's calculating the take profit of the trade you're now taking on your real account as if it needed to get out of all of these trades as well, which is why a lot of people use Ghost plus real trades, because it does go for a large amount of profit when it swings or it gets into a nice cost average sequence. It takes some very large profit sometimes. But thank you guys so much for tuning in and spending over an hour with me today. I am going to send out my Cliff Notes, any updates coming to GearBox, anything going on by the end of tonight, as well as news about any updates being pushed out by morning. So with that being said, I appreciate all of you tuning in to this wonderful call, and I look forward to seeing you on next week's. And also, remember, there is a call tomorrow, Saturday, 7 p.m. for helping people that maybe want to come over to GearBox that are stuck in Einstein Open Drawdown. GearBox does have the ability to pick up those trades. So Saturday, 7 p.m. Eastern tomorrow, again, we'll be doing my how to switch to GearBox safely call, which also is good for anybody that maybe is switching from a different product, maybe has never used an EA, maybe they're just getting GearBox for the first time. Just a good, educational call all around, and we're going to go into setting up GearBox. But look forward to seeing you on one of those, and see you next week.